Good afternoon, ladies and gentlemen, and welcome to the earnings conference call for Q1 FY27 for PTC India Limited. PTC India was incorporated in 1999 to undertake trading of power to achieve economic efficiency and security of supply and to develop a vibrant power market in the country. PTC is a pioneer in starting a power market in India and undertakes trading activities that includes long-term trading of power generated from large power projects as well as short-term trading arising as a result of supply and demand mismatches. In addition to the trading business, PTC has incubated techno-commercial consulting business to develop power market for the CNI consumers, SEZs, port trusts, etc. Let us begin with the introduction of the management team we have with us today. Dr. Manoj Kumar Jawar, Managing Director and Chief Executive Officer. Mr. Rajiv Malhotra, Executive Director and Chief Risk Officer. Mr. Pankaj Goyal, Executive Director and CFO. Mr. Bikram Singh, Executive Director, Marketing. Mr. H.L. Chaudhary, EVP, Commercial and Operations. Shri Rajiv Maheshwari, Company Secretary and Compliance Officer. Shri Mukesh Ahuja, VP Finance, and Shri Anand Kumar, VP Investor Relations. At this moment, all the participants are in listen-only mode. Later, we will conduct a question and answer session. At that time, you may click on the Q&A tab to ask a live question. Please note that this conference is being recorded. I would now like to request Dr. Manoj Kumar Jawar, MD and CEO, to give his opening remarks. Over to you, sir.
Thank you and good evening, everyone. This call gives us an opportunity to share key insights into our company's performance and the long-term vision. We deeply value this engagement with our esteemed stakeholders, our investors, partners, shareholders, and their representatives who play a pivotal role in our continued growth and success. During the first quarter of new financial year, while electricity generation increased by 9.38% to 523 billion units, with contributions mainly coming from thermal and renewable, especially solar. In the corresponding period, our trading volume grew by 12% to 25.78 billion units. This was achieved while maintaining a trading margin of 3.35 paise per unit. Notably, 60% of the trading volume came from exchange-traded products, with the remainder coming from bilateral short-term, long-term, and medium-term trades. Improved margin realization has also contributed to an 11% increase in trading income. Our products and services offerings are helping in retaining the clients in C&I segment and increased business opportunities. Recently, we have signed a long-term PPA of 1200 megawatt for procurement of solar power from NTPC Green. In the cross-border markets also, our operations continue across all the three grid-connected neighboring countries, which is Bhutan, Nepal, and Bangladesh. Energy flows to Bangladesh remain stable under the agreed contractual framework with regular flow of payments to our accounts. Bhutan is experiencing rising year-round electricity demand, especially during the winter months when water availability declines. Similarly, in Nepal, we have commenced both import and export of electricity based on supply-demand profiles. Looking ahead, we expect power demand to grow steadily at 4 to 6% annually, although short-term volatility may arise due to transient weather conditions. The National Electricity Policy Draft 2026 has been released by Government of India, which aims for an increase per capita electricity consumption to 2000 kilowatt-hour by 2030 and over 4000 kilowatt-hour per person by 2047. This same is expected to be achieved with increased market and regulatory reforms and competitive electricity markets. All such market cues are positive for trading ecosystem. With this, I would like to close my opening remarks. Thank you once again for your continued trust and support. We appreciate your participation in today's call. Over to moderator. Thank you.
Thank you. Sir, I would now like to request Mr. Pankaj Goyal, Executive Director and CFO, to discuss the quarter's financials with everyone. Thank you, and over to you, sir.
Yeah, thank you, MD sir, and good evening to all of you. Now I will go through the financial performance of PTC India Limited on a standalone basis for the first quarter of 26. Volume has increased by 12% to 25.8 billion units from 23 billion units. The volume has increased mainly due to increase in our exchange trade. Total operational income has increased by 2% to 113 crore from 111 crore. Profit before tax has decreased by 32% to 96 crore from 141 crore. Decrease in profit before tax is mainly on account of lower net surcharge income and rebate income. As has been said earlier, this is due to the improved liquidity of the discoms. In line with the PBT, PAT has also decreased by 33% to 71 crore from rupees 105 crore. Total comprehensive income has decreased by 33% to 70 crore from 105 crore. Earning per share for the quarter stood at rupees 2.39 as compared to rupees 3.54 during the last corresponding quarter. Now I will go through the financial performance of the on a consolidated basis. Volume has increased by 12% to 25.8 billion units from 23 billion units. Profit before tax has decreased by 48% to 151 crore from 289 crore. This is the decrease in PBT is basically on two account, that there is a decrease in the profit before tax of PTC India also, and the profit before tax of PTC Financial Services, our subsidiary, has also decreased, as there was a reversal of rupees 82 crore of impairment provision in the corresponding quarter ended June 25. Profit after tax has decreased by 54% to 112 crore from rupees 243 crore. Total other comprehensive income has decreased by 54% to 112 crore from 243 crore. Earning per share for the quarter stood at rupees 3.31 as compared to rupees 6.59 during the last corresponding quarter. Thank you.
Thank you very much. We will now begin the question and answer session. To ask a question, please click on the Q&A tab on the panel and click on Raise Hand button. The operator will announce your name when it's your turn to ask a question. Please accept the prompt on your screen and unmute your microphone while proceeding with your question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants who wish to ask their text questions may post their text questions as well. Our first question from the audio bridge comes from the line of Ayush Gupta from Consortium Securities. Please go ahead.
Yeah, hi sir. So I basically wanted to ask, like the PPAs which we have, the long-term portfolio that we have, how much will it expire in the next 1, 2, 3 years, and so on?
How much of our long-term contracts are going to expire in next 3 years?
Maturity, remaining maturity.
Nothing is likely to expire in next 3 years.
Okay, so if nothing is likely to expire in the next 3 years, what is the average expiry of our contracts if it's higher than that?
We will provide that data. I mean, is it available with us compiled?
Exactly.
Okay, so kindly send that query through email. We shall be responding that because the data is not readily compiled as of now with us.
Sure, sir. Thank you so much. I'll just ask another question. So around 80 gigawatts of coal capacity is to be added according to the CEA by 2032, out of which 40 is already under construction. So when I was looking at through the list, I couldn't see any power trading companies in the list of PPAs signed. So if power trading companies are not signing any PPAs in the domestic market, what does the future of this industry look like?
Actually, you have to understand that for the long-term trades now in the SBD, the traders are not permitted to bid. So traders cannot represent any generator. The long-term contract, particularly for conventional energy, which is thermal, has to happen directly between the generator and the utility. So obviously, you would never find any new contacts happening through the traders in this ecosystem. What is happening is, there is a large variability between daytime requirement of the power and the nighttime requirement of the power. That is one thing. That means there is a large variability between seasonal requirements of the power between different constituents. Someone require power high quantum of power during Rabi season, someone requires high quantum of power during winter season, someone requires high quantum of power during summer seasons, and that depends on local situations. So there is already always a gap between, what kind of context a utility is having and what kind of quantum it can effectively utilize. So those unbalances are the trading opportunities for the traders, and that those kind of trades happen between the medium term, short term, and exchanges. So that is where the trading industry's future lies. That is one thing. Second thing, we do believe that the renewable energy markets, which are currently, appear to be saturated, they shall also present the opportunities, trading opportunities for, with the storage technologies in future. So you may see some traders emerging, having long-term contacts with the renewable energy generators, possibly investing or procuring the sources for storage of the energy, and then providing that electricity during the shortage hours. So those are the evolving scenarios which we see, and that is where the opportunities for the trading lies.
Got it, sir. So essentially, our average margins, they will go down if we are focusing in the future mainly on the exchange side.
Exchange markets typically do provide a lower margin, but then that has to be, complemented with the medium terms, and possibly going forward, we might be having this storage kind of contracts wherein possibly you will procure the direct data and charging power during the abundant hours, and possibly would look for the opportunities to sell that power during the evening peak. So margins may depend upon the evolving portfolio and evolving situation.
Okay, sir. Thank you so much.
Thank you. The next question comes from the line of Vishal Periwal with PL Capital. Please go ahead.
Yeah, thanks for the opportunity. Sir, am I audible?
Sure,
Yeah,
you
yeah.
are.
Okay, thank you. I think briefly you mentioned on that battery capacity, and then probably we can increase our margin and spread. So have you done any tie-up for the same? And I mean, like, any color that can be provided for this?
Right now we are in discussion mode, so I cannot reveal much details, but we are, working on it. That much I can say.
Okay, so for the same, will be more working more like an asset owner, or we are tying up with the battery.
We are looking both type of opportunities, whichever comes cheaper. There is an opportunity cost of the capital if you invest capital, and then there is a cost to be paid in the form of rentals or a long-term service provision from any storage device. So we are, evaluating the options. That is what I can say right now.
Okay, okay, sure, sir. And second, in terms of our long-term capacity that is there, so in this quarter we have seen year-on-year decline. I mean, any particular capacity that has been taken off, or it's a lower PLF from those contract for us?
Yes, actually, this is mainly on account of lesser generation from hydro projects where we have long-term agreements. And as you are aware, it's there in the news and this also that hydro generation is below last year's level. So the long-term decline is mainly on account of less hydro generation.
Okay. And sir, just to continue with that, the long-term capacity, how do you see this steadily increasing in financial year 27 in terms of new capacity that we could add, and then in FY 28 also for us?
No, long-term capacity, I think sir explained that that there is a constraint there from the regulatory side. So we are not expecting any to add any long-term contracts in that duration. However, the other initiatives on battery and those types of seasonal and time of the day differences, those we will be taking advantage of.
Okay. No, but then, sir, the NTPC green tie-up that we have done, so is it for a long term, and how do we consider that tie-up?
Yeah, that is a long term, but there it will take some time to come online. So maybe FY29 we can expect that.
29. Okay. And how about, sir, the Tista Urja, the 1.2 gigawatt?
Ista Urja is under construction right now, and so we don't have the exact timeline, but we are expecting maybe around December it may again pick up.
December this year.
Yeah, December this year or March this year. We are not very sure on that because
Okay.
the construction is a little difficult also during this monsoon period. So it is difficult to, give a estimate. But yes, somewhere within this financial year it should start, and it is also coming up in stages. So it's not that it will start 100% on the first day. So maybe 40-50% generation, something like that is expected.
Okay, got it, got it, got it. And then, in terms of CFO, sir did mention decline in rebate and surcharge. So, sir, in this, I mean, like, surcharge, one can understand there is enough liquidity with the SCBs. But what could be the reason of a decline in rebate for us? Because
That also
anything.
is that also is actually related with the liquidity of the discounts. You see, whenever there is a contract, there is a provision for availing rebate. If generator to whom I have to pay, I pay before time, I earn a rebate. And if the distribution company which has procured power from me pays before time, they also earn a rebate. So up till now, many times we look for the opportunities where we can prepay the dues and we recover it later from the discount. So obviously, when discount is paid at a later date, they are unable to avail the rebate. And we have met the timely payment, so we avail the rebate. So the net rebate is what is reported as operating income, and that has declined because wherever possible, discounts also utilizing the rebates.
Okay. And then one last thing from me, sir. I think we have given a decent dividend in this quarter. I mean, like, any color in terms of how this number could pan out for us on a full year basis, or any change in the trajectory of dividend payout that we foresee for us in PTC India as well. That's my last question, and thank you very much, sir.
This dividend which we declared yesterday has to be seen in the context of the earlier deal from which we earned significant cash when we sold our PEL assets to ONGC. So, based on discussions with various stakeholders, currently management and the board decided to recommend that interim dividend, but that should be seen as a one-time measure. Obviously, this kind of dividend, 23 rupees per share, cannot be sustained or should not be expected every year. This was one-time special dividend kind of thing. Other than that, we will try to maintain the trajectory which we have been following up till now.
Okay, okay. Thank you very much, sir, and I'll come back in the queue.
Thank you. Before we take the next question, a reminder to all the participants to ask a question, please click on the Q&A tab on the panel and click on the raise hand button. Also, you may post your text questions on the ask a question tab available on your screen. We take our next question coming from the line of Kirit Jain with Neon Financials. Please go ahead.
Hello. Good evening, sir.
Good evening.
Hello. Am I audible? Yeah. Sir, my question is with regard to PTC India Financial Services Limited, our subsidiary. It's actually this company has almost completed 20 years of operation now. and it's like in value terms we have not received much value from this investment in so many years. So my question is basically what is our outlook and what is future we are seeing in this investment, and do we continue to hold it, or is there any, what is our outlook on the same?
Rajiv?
Want to give color on the process we can.
So there are two things. Of course, we too are, concerned about, uh, I mean, l- l- less than spectacular performance from PFS. Of course, we too are concerned and worried. And this is in the cognizance of the management and the board. Earlier also, I have been telling this to the investing community at large that basically we intend to start the process of disinvestment of PFS. I was trying to seek approval of the board. So now I think there is a consensus within the board that we should be looking for ways and means as to what to be strategic direction of our investment in PFS. We have engaged the services of SBI case for this purpose. We shall be exploring options regarding what would be the best way to recover, realize the best value for our shareholders.
Sir, but you yourself are present on the board of PTC India Financial Services. Mr. Malhotra is present, and definitely it is in an industry which is doing really well in terms of infrastructure financing. Then basically, what is something which somebody else who will come in and he'll be able to do it? What PTC India has not been able to support to PFS in that terms, if you can throw some color on it.
Rajiv Malhotra here. I'll try and answer that because it looks like
Yeah,
a
please,
bunch
sir.
of questions. Doesn't look like one question. So let me try and address this in parts. One,
Please, please.
the reason why PTC decided and it continues to believe that it should be, you know, looking to monetize or divest is has nothing to do with the business per se. It is a question of does it have a strategic fit with PTC? Having answered that question, the process again was put on hold for some time. And you're recently aware, and we've disclosed that that pause has been taken out. As MD sir just explained, a transaction advisor is on board. So, how we go about monetizing, divesting is a matter of process. The intention is to get the best value for the shareholders of PTC and PFS. Now, what is it that we intend to do while we are holding this? Simple one-line answer is build value. So the only mandate with which we are working as part of that board, as part of the shareholder appointees, is that we build value or rebuild the portfolio from the current level where it is. If
Okay.
any of your questions or any part of your question is unanswered, please ask me that again.
Okay. Fine, sir. Thank you.
I'm sorry. Answered?
Thank you. Thank you so much. Yeah, answer.
Okay, great. Thanks.
Thank you.
Thank you. Participants, to ask a question, please click on the raise hand button on the Q&A tab panel. Also, to post text questions, you can post it on the ask a question tab available on your screen. We take our next question coming from the line of Shivan Sarvaiya, an individual investor. Please go ahead.
Yes, sir. Am I audible?
Yes.
Yes, sir, you're audible. Please go.
Okay. Yes, sir. So I have a couple of questions. The first one being on note number 8 on the standalone financial statements regarding the provision of 17.4 crores. Could you just elaborate and explain what is this exactly? Give some color here.
Actually, in the power trading business, many times you see that on the one hand, PTC being the intermediary, on the one hand, there is a generator, and on the other hand, there is a utility. Now, oftentimes in the long duration context, it so happens that some change in live event or some reinterpretation of the contact events or any other unforeseen situation when the contact was entered into arises. So oftentimes these kind of disputes do get into the litigation. Sometimes it is our, I mean, consistent stand that if there is any liability on account of any contract, and if it is a matter of dispute between the buyer and the seller, then we shall be paying to the seller when we receive the money from the buyer. So in this instant case also, there is a generator on one side who has been asking and raising demand of certain sum of money because of some legal disputes on PTC. Consistent stand of the PTC has been that we shall be paying this amount when we recover it from the concerned utility. Now the matter has been decided by the adjudicating authority, which has said that you first pay and then you take steps to recover it from the counterparty. So for payment, we are creating this provision. We still feel that when the question of recovery from the concerned counterparty comes, it may somehow become a matter of further litigation. So, in the best interest, as in consultation with the auditors, we have recognized the liability. We shall be raising our claims on the counterparty. We shall be pursuing our legal means. But right now, there is no clear visibility regarding recoverability from the concerned counterparty. Therefore, this provision has been made.
Okay, sir. Thank you. Thank you for this detailed answer. So the other one was on the debtors part. Could you could you just help us with the absolute debtor amounts as at June 30th?
Yeah, the absolute debtors amount on June 26 is 4,469 crore.
Okay, and so could you help us with like give some color in the within this 4,469 crores, who would be your top five debtors?
Yeah, just a minute. Yeah, like on 30th June, our top debtors is Punjab State Electricity Board around 860 crore, then UPPCL Uttar Pradesh around 600 crore, Haryana around 500 crore, Rajasthan around 400 crore, Tamil Nadu around 300 crore. So these are the top 4-5 debtors actually.
Uh, like these are the aging of these debtors is pretty high. So what would be our ROC? What would be our aim to earn an ROC on these debtors?
No. The aging of these debtors are not long actually. So the aging of the debtors only which are on a back-to-back basis means that there are debtors and correspondingly there are creditors. So this, as MD sir has already explained, there are bills regarding change in law, compensation, etc. So on this, in these type of cases, when we receive the money from the buyer, then we pay it to the seller. So it means till the time we don't receive the money, so it is being shown in debtors also, and it is being shown in creditors also on a back-to-back basis. So only for that such amount you may be seeing on a back-to-back basis on a higher period basis. But as far as the PTC exposure is concerned, so that is not more than I will say not more than 60 days, wherein PTC has taken an exposure and that is pending.
Okay, sir. And sir, in these contracts, sir, like how do you price for these contracts such that we take so that we are rightly pricing for these risks and we earn a return on capital which is respectable?
There are two things to look into this. Actually, pricing is not entirely into the hands of the PTC. Basically, you have to compete and earn your bread. So competitive landscape also depends upon the counterparties, whether they are good and timely paymasters, whether they are not, whether we will face, based on our past experience, some challenges in recoveries, whether we will not, which counterparty is prone to more litigation, which is not. So that is one aspect of it. When we consider entering into contract, basically, generally speaking, all the contracts are competitive bidding basis, so we factor in those parameters and then we try to quote. But once we are into a contract, then it is out of our hand. Whatever assumptions we had made at the time of beginning of the contract, they have to be honored. Whether or not that contract finally turns out to be good or finally does not turn out to be as good, but we have a robust risk assessment mechanism. So before bidding, we do assess the risk, we assess all the parameters, we assess financial viability. Sometimes it is also a call which is to be taken that some contract might not look as remunerative on the face of it as you would like it to be. But to create a market dominance also, sometimes you do take marketing calls. So this is, I would say, a multidimensional issue, and every contract in itself is considered by the management prudently.
Okay. Okay. So just coming back to this provision, sir, I'm just trying to understand. Like we've come across this 17.4 crores as a provision that we needed to take. So one is that how are we pricing such events into our spreads, into the amount that we charge to our customers? Sir, how are we seeing to it that such events do not help us earn a respectable ROC on our business.
These are the actually risk of being in this business. You see, the contract is for 15 years, 25 years, and so. And when we frame the contract, law was entirely different. Now, how the law has evolved over a period of time is for everyone to see. Everywhere we see a plethora of, and obviously some situations do create distress, just like cancellation of the coal auction blocks, which created distress. Many generators who were supposed to supply timely electricity to our counterparties were unable to honor those commitments. So these kind of events do happen, and this is, I mean, a inherent nature of this business. We try to, I mean, resolve disputes in as amicable manner as possible. It is not that we have made a provision today, so we are not after the counterparty to recover this money, but litigation do take time. So as a prudent accounting policy, of course, we have taken a provision, but it is not like this ki we are leaving this money, we shall be pursuing our legal recourse. But to answer your question, this is really, I mean, so difficult to price and so difficult to predict.
Correct. So in the same context, sir, what are we, sir, how are we trying to increase our return on capital, our ROC, our ROE? So what are the things that we are doing? And in terms of the margins which are there, what are the levers that we have where this can go up, 3-5 margin that we have? So these two questions.
Actually, as long as the market is fragmented and the trading business, I think more than 80% trading is happening on the long-term contract basis, in which currently traders are not permitted. Now, I mean, to give a depth to the spot market and medium-term market and the short-term market, some policy initiatives would be required to give it a depth. Otherwise, if you look at the overall electricity scenario, the peak demand might be touching 260,000 megawatts on any given day, but the trading is hardly happening for 8 to 9,000 megawatts on the spot markets and the exchanges. So that is the current level of depth of the market, medium term, short term, bilaterals combined, except the long term. Now, should the policy initiative come in which there is more merchant power, more availability of the market, there is more depth, possibly there would be much more opportunities to trade and flourish and everyone to grow. Currently, market is fragmented. The threshold for entering into the power trading business is really very low. There is categorization of the license from category 1 to category 5. And for category 5, to even the net worth requirement is pretty low, I would say. So basically, how do you compete in this market? You compete on the basis of your reputation, you compete on the basis of your offerings, you compete on the basis of your connects with the buying and trade, selling entities, and you compete basically on the strength of your balance sheet. I would not say that this is a very high yield kind of business. This is a pretty, I would say the return on equity, return on capital employed are pretty moderate, that is to say. But then traders do serve an important purpose, mm, removing the imbalances across the regions, removing the imbalances across utilities. So trading as a function has been evolving, has been growing, and that is evident in our volume growth also. It could grow more if there was more favorable policy.
Correct. So, sir, on the policy front, sir, are you seeing anything that is changing? Any timelines? Are we involved in, structuring this policy? Anything that you could,
Many
give
things
us
are
some color on that?
happening. Many things are happening. Recently, I mean, a pilot has been done on contact for difference by the CFD. The CFD was the first contact. SECI has invited bids for contact for differences. Should that succeed, I think that opens one area. Then the futures market has been opened up, and we have been, I mean, working to get some degree of mastery as to how and how we should be participating in that market. There are many other initiatives also on the block, but I would love to see that somehow, I mean, there is more availability of the merchant power, and not all the long power is sold on the long-term basis. If there was a policy, let us say that any new upcoming power station would only 80% contracting would be done through the long-term contracts and 20% has to come to the merchant markets, things like that. But about that, I'm not the right person to ask whether or not there will be such policy changes. It may evolve over time. Necessity is the mother of invention.
Sure, sir. And so just last one, what would be our cash position as at June?
Pankaj?
Yeah, just a minute. The cash position as on 30th June is net cash is 2,451 crore.
2,451.
Yeah. So now out of this, we will be giving the interim dividend which we have declared.
So this is on standalone basis, right? 2,451.
Yeah, this is on standalone basis.
Sure, sir. Okay. Thank you very much, sir.
Thank you. Before we take the next question, a reminder to all the participants to ask a question, please click on the Q&A tab on the panel and click on raise hand button. Also, you may post your text questions on the ask a question tab available on your screen. We will take our next text question coming from the line of Jayendra Nujela. And the question is number one, going forward from PTC, what can be expected as investors in terms of business improvement and reward to investors? Number two, how we can look at PTC business once NTPC becomes sole promoter.
Two questions regarding the future prospects. Really, you understand the protocol prohibits me from making any prediction. But ours is a stable business, and we do not see any such handbits which would destabilize it. This special one-time dividend, if there was any apprehension in anyone's mind, let me be very clear. Before we sold real assets, we were not having this much cash on our balance sheet, and still we were managing our trading operations very well. we hope to continue to do so. So that is one thing regarding the predictability and stability of our business operations in terms of trading operations. That is one thing. Regarding NTPC becoming sole promoter, I think shareholders themselves had voted and the result is known and reported to the market. Is your
Thank
question
you.
answered?
We will move on to our next text question, which comes from the line of Lipika Kundu, an individual investor. And the question is, sir, can you tell us regarding this investment or monetization of PFS? How much work has been done and what more work is remaining to be completed and by what time?
It is difficult to put a timeline on such kind of things. If tomorrow I have to, I really cannot go and say that it is a slum sale and come and buy this company. It cannot happen like that. It is a nuanced process in which at least two regulators are involved. RBI is the regulator, SEBI is also the regulator, and multiple approvals at multiple levels are required. The first concrete step in doing the disinvestment would be appointment of the transaction advisor, which we have concluded recently. And we, I mean, in consultation with the transaction advisor, hope to take this process forward. This much I can say. I cannot really predict the timeline, but we will try to see that we maximize the value for our shareholders. Anand, would you like to say anything?
On this transaction, the way we are moving ahead with the after appointment of transaction advisor, we believe that to a greater extent, closer of this FY, we should be in position to tell something to the market. As the thing progresses, we'll keep updating in terms of the material information which is required to be filed with exchanges.
Thank you. We will take our next voice question coming from the line of Channamalu Halagodi, an individual investor. Please go ahead.
Am I audible, sir?
Yes.
Sir, my question is regarding divestment of PFS only. In previous investors call held at Mumbai, Raju Malhotra sir said that within next few months, the board will decide how much shares the PTC India will hold and how much shares it will monetize. You please give clear picture on this. It could boost the confidence of the investors community, sir.
No, I don't think I have said what shareholding
Really
we
sorry
will
to
hold.
interrupt, sir. There
Yeah.
was some static coming from the mic.
Is this better?
This is much better. Yes, sir.
So, to respond to Mr. Hanawadi, see, I'll again repeat what we have guided in the instance in Bombay that he's speaking about. What we have said is that over the next few months, the process will be set in motion. We've just informed the progress on that. Now, what I said was that how much of the divestment will take place, in what stages, etc. And I would not be able to say anything beyond that because there are many possible configurations, and only the best possible configuration that we determine to be in the interest of the shareholders. That is the way we will go about it. So it is not as simple as saying what PTC will hold and what it will sell. I don't think that is what we have conveyed.
Okay, sir. Thank you, sir.
The entire idea is if you started a divestment process, then I mean it has to be understood in this context. Then if you started this process, then why would you want to hold? In the end, I mean, if we are a majority owner currently, and if there is another set of serious investors, then I don't think this actually indicates that we should be keep on holding. How divestment shall happen will depend upon what our transaction advisors during the course of future months tell us based on market studies. But there is no definitive and fixed thought on this. we should necessarily hold this much percentage or that much percentage.
Okay, sir. Thank you, sir.
Thank you. We have our next voice question coming from the line of Jayendra Nujela, an individual investor. Please go ahead.
Hello, am I audible?
Yes, sir, you're audible. Please go.
Yeah, recently CERC ordered HPX, like any investor can hold max only of 5%, no? So going forward, like how we can see HPX business in terms of PTC?
No, CRC did not order that any investor can hold only 5%. CRC ordered that if you want to become a trading member, then you have to limit your shareholding to the level of 5% only. Since we are currently owning more than 22% of that exchange, we cannot become a trading member on that platform. So if we have to bring down that equity below 5%, if you wish to start trading on that platform, that will depend on many factors to be considered by the management.
Okay, sir. So how about sir PTC consultancy business doing good? Can you throw some projections on this business improvement going forward?
Giving the definitive projections is basically, I mean, I'm bound by the protocol not to give that kind of guidance, but we have been steadily growing, and I would say that that's also a stable piece of our business. Kindly look at the trends.
Any new ventures like are we planning to start, sir, other than this trading business? Like we have started finance, we have started energy, we have started renewable energy also with NTPC and NLC India. Going forward, are we trying to do more business with other
Uh,
partners?
Regarding NLC India, I am happy to inform that the approval of the Department of Public Enterprises has been received for formation of JV with the NLC. So the administrative hurdle in creating that JV post our MOU with NLC is now removed. Now we are in the process of taking that initiative further. And based on consultation with the NLC management, we will try to see what kind of business opportunities are emerging, which can be gainfully materialized and realized through that JV platform. So we are going ahead with that. Uh, we have also, I mean, memorandums of understanding with SECI, with ESL, and many other entities. So we constantly look out for business opportunities. Specifics I cannot go right now, but then yes, we that is how we grow the business.
Thank you, sir. One more question regarding this Sikkim. We lost one of the uh, like washed away, right? One of the dam. Okay, so can you throw some like information on update on that when the again business will start in that one, sir?
Yeah, as our ED marketing has informed that the Tista construction is going on after that earthquake happens and cloud burst was there. So the project is now being developed in two stages. First, they are building the coffer dam, and then the full dam will be constructed. So the power will be it is estimated that the power from the coffer dam will be started by December actually.
Thank you, sir.
Thank you. Participants, if you wish to ask a question, you may click on the Q&A tab to ask a live question. You may also post your text question on the Ask a Question tab available on your screen. We will take our next question coming from the line of Vipul Kumar Shah with Sumangal Investments. Please go ahead.
Am I audible, sir?
Yes, sir.
Yeah. So can you share the financial of our power exchange associate for this quarter?
Yeah. So the total income for the quarter, revenue from operation for June 26 is 13.98 crore. The profit after tax was around 5.16 crore.
Okay. And sir, second question regarding lower surcharge and lower rebate. So, is this the trend going forward for all subsequent periods, that due to improving discom health, we'll have less income from late payment from discoms?
I think we have already answered and responded to that. So yes, of course, this is there is a cyclicity to it, and there is better liquidity with the discounts. They do avail the rebates and they do not delay in payment, so there is no question of earning surcharge income. Oftentimes, situation changes.
Okay, thank you.
Thank you. Your next question comes from the line of Ayush Gupta from Consortium Securities. Please go ahead.
Yeah. So I was asking that the surcharge income and expense that we have and the rebates, does that only come from long-term sources or both long-term and short-term sources? And if both, then what's the percentage for each one?
It comes from both the contexts. Whenever there is a delay, there would be a question of surcharge. So it comes from both. Do we have the breakup? So breakup, kindly send us a mail. So we shall be giving the numbers in, because the surcharge detail as to how much has been a long term, short term, medium term. Right now, that detail is not available. We will be sending that detail.
And so for the NLC JV, what is the kind of investment that we are expecting here? What's the kind of commitment?
We had sought permission of the board to invest up to 500 rupees crore, 500 crore rupees into that JV, but that will unfold over a period of time as to what kind of projects we are deciding to execute.
Okay, sir. Thank you.
Thank you. We have our next text question coming from the line of Paresh Shah, an individual investor. And the question is, from PTC Energy, we sold how much per shares we received, and from that you paid rupees 23. How much cash you have reserved, and throw some light on NLC deal.
Regarding NLC deal, I think I clarified that the approval for formation of the JV has been received from the DPE. Now, the formation of the JV formalities are being completed. Investment in principle approval from the board regarding certain sum has been taken. Going forward, we will try to build projects through that JV. That is clear. Regarding other question, I would ask CFO sir to answer.
Regarding this PTC energy sale, we have received around 1185 crore, and we have given around that after paying taxes and all that. So we left with a cash of 1100 crore. So how this cash is utilized, that we will say that we have already paid as this all 1100 is special dividend. That already 200 crore or so we have already paid in terms of higher dividend in the last years, and around now we are paying around 700 crore. So that around 900 crore has already been utilized for the payment of the dividend out of this 1100 crore, which is left with PTC.
Thank you. A reminder to all the participants once again, to ask a question, please click on the raise hand button to ask a question. And you may also post your text questions on Ask a Question tab available on your screen. As there are no further questions, I would now like to hand the conference over to Dr. Manoj Kumar Jawar, MD and CEO, for closing comments.
Thank you. And thank you, our esteemed shareholders, for being part of this communication today. We look forward to such opportunities to hear from you what your concerns are, what your aspirations are, and it gives us a cue as to what our future direction should be. So thank you for being with us today. And we hope that you remain with us as a long-term investor in our company. We'll do our best to manage the affairs of the company for benefit of the shareholders. Thank you.
Thank you, ladies and gentlemen. On behalf of PTC India Limited, that concludes today's session. Thank you for your participation. You may now click on the exit meeting to disconnect. Thank you.